Today, we're going to pull back the curtain and find out where Wall Street's smart money is really placing its long-term bets. We're talking about the moves happening far away from all the daily hype and market noise. We're going to follow the capital and see exactly what the strategy is. So, where is the money really going? If you forget all the drama for a second and just follow the data, a pretty clear pattern starts to emerge, and we're about to uncover it, piece by piece. All right, our first clue leads us right to the heart of the biggest tech trend on the planet right now, artificial intelligence. But hold on, this isn't about some flashy new app. We're talking about the fundamental backbone of the entire AI boom. Exactly. So instead of trying to guess which single AI app is going to win, the smart money is buying the picks and shovels for this whole digital gold rush. We're talking about the absolute essential hardware and the cloud infrastructure that every single AI model needs to even exist, no matter who builds it. And here is the proof of just how serious they are. Institutional ownership in a key infrastructure company has jumped by 6% in just the last quarter. Now, that might not sound like a huge number, but at this scale, trust me, that represents a massive shift of billions of dollars. It's a loud and clear signal. So why this move? Well, the strategy is actually pretty brilliant. The demand for high-performance computing is just exploding, right? And this company provides the plumbing for the entire AI industry. It's a bet that pays off no matter which AI model wins in the end. And that is a perfect recipe for predictable, high-margin growth, which is something Wall Street absolutely loves. Okay, let's move on to our second clue. We're shifting gears from the future of tech to the bedrock of the global economy, a digital payments giant. The best way to think about this company is like a super resilient toll booth, just collecting a tiny, steady fee on this massive and growing river of global transactions. And look at this. The buying here is even more significant. Institutional holdings are up 9% just this year. That is the strongest buying pressure this stock has seen all year long, and it signals a major vote of confidence, especially when the economy feels so uncertain. The logic here is just rock solid. You've got international travel bouncing back, and e-commerce just keeps chugging along. So this company is perfectly positioned. But the real secret sauce is its financial strength. It generates an enormous amount of free cash flow, and it has a history of doing really well when markets get choppy. It's what you'd call a classic quiet compounder, a company that just steadily grows your money over time without all the crazy drama. And this quote right here, this idea, is the thread that connects everything we're talking about. When the market gets turbulent, smart money doesn't run and hide. It hunts for stability. It looks for these durable business models. And that philosophy, seeking shelter and strength, leads us directly to our third and final clue. Our final clue is in a sector that's, well, it's graduated from being merely important to being absolutely non-negotiable: cybersecurity. In the world we live in today, building a digital fortress isn't just a good idea. It's a fundamental cost of doing business, period. I mean, the threat landscape is just more dangerous than ever. We're seeing record-level cyber attacks that target governments, banks, hospitals, you name it. And because of that reality, cybersecurity budgets are one of the very last things any company or government would ever dream of cutting. It's an essential service now. Whoa. Now this is the most aggressive institutional move we've seen yet. A staggering 11% increase in exposure. This isn't just some casual bet. This is Wall Street signaling extreme confidence in the non-negotiable future of this entire sector. This type of business checks every single box for a long-term institutional investment. The spending is essential. It's basically budget-proof. The revenue is recurring, kind of like a subscription service. And once a client is plugged into their system, the switching costs are so high that they almost never leave. It's the perfect combination: necessity, recurring revenue, and long-term demand. Okay, so we've looked at 3 different clues: AI infrastructure, digital payments, and cybersecurity. On their own, they're each a compelling story, but when you put them all together, they reveal a really powerful, overarching playbook. It is time to connect the dots. And this table just lays it all out so perfectly. Notice the pattern here. Each investment is anchored to a powerful, undeniable trend: the AI revolution, the unstoppable shift to digital commerce, and the rise of global cyber threats. But look closer at those key features: high margin growth, massive cash flow, reliable recurring revenue. See? These aren't speculative gambles. These are pillars of financial strength. This is basically a fortress portfolio built to withstand any storm. So the crucial takeaway here is this:
Wall Street's quiet money isn't chasing the flavor of the month. It's methodically building positions in essential, non negotiable sectors that are built to last. These are businesses designed not just to survive, but to actually thrive through economic cycles, market volatility, and even major technological disruptions.
Which, of course, leaves us with a fascinating question to think about. We've just broken down the defensive playbook, investments built on necessity and stability. But what happens when the market shifts gears and sentiment turns bullish? What will Wall Street's offensive plays look like then? Now, that's something to keep a very close eye on.